Okay, welcome to this week's sector situation video with me, Wayne. My partner, Ryan, is wrapping up our market outlook. It is October 9th, 2022. It's a little after 2 p.m. here on the East Coast, and I want to greet all the market rebels out there and chart watchers. Let's get our stuff flashed here, and then we can talk about sectors and so on and so forth. And I just mentioned this in the macro measure video, but it was interesting to me that we had things come together really in a textbook way. I think in at least one of the videos last week, I noted that the XAU and the XLE, they were looking interesting compared to so many of the other ones. They looked like they were maybe trying to do a little something. We saw some, there's our intellectual property rights notice, so you don't miss that. We did see some activity in UOA. And so that was interesting to me that we did see both of those sectors seeing a little bit of UOA. And then they did something that was really in line with the chart and really in line with the UOA, despite the fact that the market was not so cooperative in the second half of the week. That didn't seem to matter much here in XLE. That still put a good week together, as you can see. And that was, of course, due to the news that's specific to energy, and that's why it has to really be treated as its own thing. I think it's got so important, and it has so much sector-specific news and stock-specific news. At times, it really impacts the entire space or sector, or much of it. Let's put it that way. Did take a little bit of a breather there on Friday in a really rough stock market, so nothing to be ashamed of. I mean, if I had traded it on the long side, which I wish I had, all week, just liking it, putting ideas in for it. But of course, I don't have time to unfortunately do that. I wouldn't have time to analyze all the stuff that I try to get to each and every day for UA Pro and other services that I try to help out in. But this XLE, it really did fulfill. Now, is it at resistance? Did it move too far too fast? Did see a little bit of bearish paper, and I actually did put a bearish trade in. Really not wanting to fight against that current trend, but just it did move up rapidly. I could see a brief pullback, and then we'll see what happens from there. But the main thing I wanted to note right here at the start of sector situation this week is, if you look at all these charts, there's the 12 sectors we usually cover in this grid. Boy, right, it was risk off again by the end of the week. There's just that's what stands out to you. Now, there's some that were worse than others, utilities, right, with interest rates heading higher. That wasn't, of course, good for them. Real estate, new low. Okay, so there's some really rough things. Back to new lows really here in discretionary for consumer. Same for the staples. But other sectors, of course, had it rough as well. So there was some really rough stuff, and that just is indicative of risk off. And so, again, not too much is really sticking out right now, which is the unfortunate part, because that's really what sector situation, when we put this together a little bit over a year ago, we were hoping to really be in a bull market. And at least that's my preference, because then you can see where the money's starting to flow next. And the whole contention is that the institutions are the only large institutions in the aggregate are the only ones that can really move around over the long haul, these big names and an entire sector. And so if there's money flowing in or out of there, we should be able to really assume that and note that, and then try to go with the technical flow from that point on, when things are, freshly seeing momentum shifts, or we're seeing some exhaustion or whatnot. But we're back into risk off pretty much everywhere. So let's just note that. Now, I did cover some of this in macro measure, so I apologize, but if someone doesn't watch that, I at least wanted them to see this. It's a very imperfect measure, right, of the so-called fear-greed index. But the whole idea is that, right, this is going to give you sort of a sentiment reading. And there's better ones, of course, that are out there that are what the big firms, of course, keep internally and share with their clients. But we don't have access to those, unfortunately. So we have to go with something like this that's kind of basic and maybe leaves a lot of things out. But you're in extreme fear right now. But what I wanted to note is that the timeline, you look at where we have been over time, we've been far worse than this. Even this year, there's been a worse reading. So yeah, we're in extreme fear, but it certainly could go lower. And that's what I'm really thinking of here, because I noted this as well. If you look at this MMTH, percentage of stocks above the 200-day average, it's off the lows. And I can just show you that really for the other ones that I can access here, right? MMFI for the 50. And this too is off the lows, the stocks, percentage of stocks above the 50-day average. And just to round it out, the MMTW, which I think has done an excellent job of flashing when there's been a tradable low. If you've seen some of my other videos that I've done, and maybe saw some things I've done in some of our live webinars, yes, this has been a really good, at least giving you a short-term trade, but it's got room to fall. It could happen quickly, but it's got room to fall. So I just wanted to note that, because when we look at the sectors, they're all back in retreat mode, and the major index ETFs, which I covered in macro measure, those are all really in technical jeopardy of losing the 200 SMA. And I'm just going to show one of those because I don't want to belabor that since it is discussed in macro measure. But if you don't see that, or you watch this first, the purple line is the 200 SMA right there. And so you're getting really close to that again. Last week was an ugly finish, an ugly candle. Here's the Bollinger Bands on the SPY. And so the reason I'm looking at stuff is I feel like the bigger picture may be in order, because of the fact that I think we're very close to a washout phase developing that really the market may need, so that it has a chance to rally and follow the seasonality. It's typically positive from the back half of October through right the middle of December. So that runs for about 2 months roughly. Seasonality has been pretty good to keep an eye on, I think, this year. I think that's a fair statement. So I don't want to not do that, right? But at the same time, we are making lower lows. We're falling below big levels. I think in the absence of some kind of a news driver, something, I just feel like we are close to and may finally see that washout phase that's threatened to appear many times this year, but it just hasn't. And every time that this has been on the brink, it's been kind of like methodical, working things down, not like what we see back here. Just to give you an idea. And I don't expect something of this magnitude, by the way. I'm not expecting to drop from, let's say, what's that, 338 on the high to 218. I mean, that's 120 points. That's not quite, that's about 30 something percent, right? So I'm not saying from here, I'm thinking more or less 10 more percent is where we would fall. And maybe you come down to here near 320-ish if this were to happen in short order. And I think that makes a lot of sense in some ways. You've got some support near there. You can see that's sort of a good flat line right near there if you go back and look at some of these prior touches. So that would make a lot of sense. So that's what I'm thinking, that right, if you're a bull, you may want to just let this play out, and then at least claim that you think that 2023 has brighter prospects, and you bought everything when it was on sale down here, and the seasonality kicks in, and maybe the market makes back a significant chunk of some of the losses it suffered, because we all know that Wall Street's incredibly self-serving, maybe the most self-serving place on the planet, or one of them. So there you get an idea of what I'm talking about with bigger picture stuff and so on and so forth. And I'm going to flash this one as well, because this is just a look at how far below or how far removed from moving averages we are. And you can see that right now, if you go back on the spiders on the weekly, right, there's been some major lows where we really became stretched from weekly moving averages. But this year, with the June lows and where we are now, these are only really surpassed by the COVID sell-off, right, which was dramatic because, of course, right, that really threatened so many things before the madness, that hyper madness that kicked in terms of the Fed and the government supporting everything. But that's really where we get to, I think, from there, is that you've got that that was dramatic for a reason. And really that's what it takes to really get that kind of dip of these dots. It would be one way to put it, but we're down there again. And that's why I'm saying they almost they almost need to get to the cathartic washout, cascade selling, capitulation. That almost sort of needs to happen, that now that we're here, and to really get a chance to rally strongly, right? I think because everything's really rolling over, it's almost like this would be a great time to do it, wash things out over the next week or two, and then try to get your end of year plans together to try to mark things back up to a more palatable beating at the very least, for so that when people get their annual statements, they're not in absolute horror like they would be if things say got marked out right here towards the end of the year. So we know how that works. Will they be able to do that? I don't know, of course, but I'm thinking that's it. I just don't see, the other factor is I just don't see what would be positive. What would turn this? It would really take news maybe that's out there that I've missed, but I just don't know what turns things around. I think the trend of news is terrible. And as I noted in the macro measure video, the news trend tends to be in line with the trend of prices. It's just the way that things typically unfold. You know, and for every good story now, we're probably getting 5 bad ones. And during a phase like this, for every bad story, you probably got 5 good ones, just to kind of throw something out there. But getting back to this, let's jump back over to the sector view, which is right here. And the sector view is what it is. So some things are making new lows, some things are making similar lows, some things are barely above lows, but they're all in jeopardy, you know, at this point. They really are. Now, what I would say, and I'm going to go to an individual chart, is to chart a few other things, because I think this is getting interesting in a couple of places. XAU had a nice little, we'll probably need to go to the daily for this one. It had a nice little development there that followed through earlier in the week, hung in there, but eventually that came around to have a rough day on Friday because, well, the stock market got living daylights beaten out of it. And so they pretty much sold virtually everything. Now, the interesting thing is this gold line, we're back above the 50. It's on the 50 right now, roughly speaking. And you've got your short-term 10, 15, 20 represented in white, red, and blue, respectively. Those are all attempting to start upsloping or positively sloping. So that's usually can lead to a little bit more of an attempt. And that would be interesting if it did, because then you'd be visiting maybe the 100 there in white for real. And you haven't visited the 100 for real in almost, well, about 5 months. It's been a while. So that would maybe be something. Plus, to do that and maybe get through here, right, that would really start taking out some highs. And that's what you need to do to change trends. So I'm hoping, and I don't wish this for anyone that's long, of course, but on a personal level, I just keep hoping that this rolls over more and I keep losing on the buys that I've made. I hope to buy more metals at lower prices, but I am a little worried because, as I noted last week, we're seeing more bullish paper, and that worked out so far. And the charts said things were looking a little bit better, and that worked out a little bit. So I'm a little worried because I see more positives than I want to on a very kind of selfish note there, but just still calling it objectively. Now, another thing, of course, we keep an eye on is XHB. And this is your home builders, because this is a big area. They have been more resilient than I think common sense would dictate, but they did also start to struggle at the end of the week, failed at the 100 there in white, rolled down to the 20, very close to the 10-15 again. So if they lose that, they'll be back below everything. And they are looking vulnerable. This, despite their efforts, right? This was a decent little run they had, given their due, but this is a lower high versus here. And so now it becomes, do we get a similar low, a lower low? Do we break down? Does it get a higher low? We have to wait and see. But shockingly to me, this is hanging in there. And we'll come back to something similar to that. And let's talk about the SMH. Now, this is a big area. As you all know, I like to talk about this. And the semis had a really nice recovery week going, got themselves above the 20 even on a closing basis, but quickly reversed. And by the end of the week, they were right there with young Goodman Brown. Their dying hour was gloom. that's one gloomy finish right there, right on a week where you did this. So I don't think on Thursday that a lot of us were thinking that this would end all the way down here, but it did. And that was a real smashing. I mean, you're talking about a 6% drop nearly from the close. I mean, that's just a really bad, it's a really bad day. Down 6% for the entire ETF with all those stocks in it. So that's on the verge, right? You can see it's near the Bollinger Band. It's getting oversold in terms of Bollinger Band, but it's still a lot of these things on the weekly basis, especially major index ETFs are not below 30. Here's this, and this is at 35 on the weekly itself. So if you really want to get technical about it, right, theoretically, we are in a downtrend, bear market. This should get really oversold at some point, and then you would say, okay, well, we finally got there, but you're not there yet. So that means like, again, you're making lower lows, you're losing the 200 week here. You have room to fall on the readings, but you're stretched against Bollinger's and you're stretched against the 200-day moving average. So like I said, it all comes back to this thing should either it's time to route these stocks, or if they get news, right, they could definitely turn and burn. But to me, it's more or less this in the absence of news, I think we're very close to a washout phase. I've said it before, you were on the brink and they've forestalled it. Maybe they'll do that again, but I do think it will take some kind of news. I don't know what the latest fantasy will be that they will hang their hat on. Maybe there will be something that's more tangible, but this whole thing about a Fed pivot, I just kept having a hard time when they were trying to sell the whole Australia went a little bit slower on their rate increase thing. I felt like it was really grasping at straws because let's face it, the inflation numbers are far worse than the government numbers. And anybody that visits a store or pays for tuition or has a hospital bill or anything like that, we all know that. I mean, I think it was my wife or may have been my daughter, wife. I was talking to someone and they were just saying that, you know what, my normal grocery bill, they said it's just shy of double what I used to pay only a couple of years ago. So, and I don't do the shopping, so I can't really, I do some, but I mean, I don't do that much that I can really argue with that, but it didn't seem like they were exaggerating, at least in their mind. And some of the prices I've seen suggest that a lot of things, maybe not the entire grocery cart, but a lot of things seem to have gone up at least 50% in my view. So getting back to the kind of XHB comment that I made, I'll come back to something similar. That's where I like to come back to here. And this is the real estate ETF. And I think I mentioned this last week. This has been a really, some of our UOA pro traders were kind enough to let me know that, hey, I'm still riding that baby, or I got back in. And that's great because it's really been, it's worked like a charm. I mean, I've been really happy with that. It kind of was much like other things. It was kind of baffling me that it hadn't broken. I felt like what in the Sam Hill, as they say, is going on? This thing really should have broken, and it finally did. And now it's gotten routed. But this is what I mean about, I'm thinking that we're on the verge of something like we've seen in these phases where it just gets ugly. It's near a Bollinger, it's near a low, then it just washes out, and then you get some kind of relief. Of course, maybe more than that. But I'm thinking, right, it's so overdone right now. If there's bad news that continues and markets keep selling, just get this over with. It'll get to an extreme. The volume will pick up as it did here. You can see that. And then when you get really outside of your Bollingers and you've really gotten smoked, just utterly smoked, then you can get something, especially with the seasonality being what it is, then you can get something that might be worth trading. But it's been an awful year overall in here, but you got to stop and think it until really just not even a full month ago, right? It was still, I think, hanging in there more than I expected, given all the problems. And I think there's going to be major problems. The folks in Rebel Pit and other folks in some of the webinars that are pretty wired into real estate they're talking nothing but negative stuff. I mean, really negative stuff. So I think this is finally responding to that. And that looks really rough, clearly. Now, it is overdone in the sense that I think even your RSI's 27, and you're outside of your Bollinger Bands. And I mean, in terms of being wrecked, as they say, here you are on a weekly look on SMAs, and you're really at, other than COVID, the COVID low, with everything going, really going express elevator to hell. This is the worst reading that you've got. So this is bad. This is bad already. It's probably these things are probably getting close. But like I'm saying, I think bulls would do well if they would abandon the hope that they need to rally this thing every day. Let this thing just completely wash out, and then you might get a more constructive way forward than you've got right now. But they have resisted doing that. So I think that's one reason why this thing just continues to prolong itself. Maybe they're just not. They're so used to the Fed put. Maybe they just still don't believe that the Fed put isn't there anymore. I don't know. Maybe they're waiting for the system to really officially crack with some news story, waiting for that to really force the Fed and other central banks around the world to do something. Here's oil. It's finally acting better. We were noting that this thing was in a downtrend, and that it was kind of at odds a little bit with what we saw, probably a case where stocks were sniffing out, better stuff than the actual oil future, which is interesting. But this is oil. This is November oil of this year. And so you can see that did put a nice little run together, took out one high. So now we have to see if it does back up, does it put in a higher low and then go again? That would be our watch for that. But that's where that is at the moment. We can just use a simple view on that. We could take a look at, let's see if we can get lumber, LB. Let's see what they're willing to give us on lumber, LBS. Let's see if it gives us that. Nope, it's fighting with us again on that one. LB, let's see what I can get for us here. I guess I'll use the nearest future. Oh, well, they've got November down there. Okay, maybe that'll come up. So still just a little bit off the lows. I mean, that's not really much to say there. I guess that's a little bit of an improvement. We'll take it, type of a thing. But I don't know if you're really expecting any kind of real surge from here the way it looks quite yet. You would need to definitely put in a higher low and then have this temporary high get taken out. Or if it keeps going from here, it's got its work cut out for it to take out this high. I like to see really a couple highs get taken out before I'm convinced that something, not that I wouldn't trade it before that, just that when I really want to say, yeah, that's really, that's starting to really make its move, that's maybe legit. I'm really willing to trade that bigger now. Maybe we're in the early stages of a trend change. And here's copper to kind of round things out. We started adding copper, as I noted last week, old Dr. Copper, as so many call it. And this still with the lower high versus this high, me like catching it visually, and then this low is lower here. So this thing's under pressure, right? With another lower high put in. Anybody that wants to see that things aren't worsening definitely wants to see these lows hold here, because otherwise, right, then you'll have another lower low, possible full retest with lower highs put in, and maybe that leads to another leg lower. So there's really the big view of stuff in terms of the sectors. And I hate to really seemingly sound a one note, but I've got to go with my experience, and that's what guides me on this stuff, just having done this stuff for so long. And I think you got to be on guard for the news story, some kind of a big news story that really could shift things, because we are oversold and we're near lows. And whenever you're near lows, just below them, just above them, right near them, right, that there can be false breakdowns. That's often a time where you get double bottoms. But again, we haven't seen a capitulation move, a really serious spike in the VIX, moved up, kind of subdued for the week, but ended up closing a little bit more strongly, giving us a little more data on there. We'll go to a 5-year view. And as I noted, you tend to see when there's really a big sell-off that it kind of punctuates itself with the move, at least to the high 30s into the mid to low 40s. We haven't seen that. Doesn't have to happen, but it sure seems like it's sort of building up to something with these higher lows, and then maybe it will finally deliver. But the one note that I hate to keep sounding is right. Risk came off last week towards the end of the week, went to the risk off posture that we've seen so many times, and only thing really working at that point was energy, which has its own story. Real estate is coming under pressure again. The paper in there has been bearish. It's been right. We did see some big UOA that I added in the index ETFs to the bear side. I will probably prep for bull side whenever I get the chance in a lot of things, because we're at really a fireworks type of a level and juncture, with seasonality for the markets kicking in positively, typically the election coming up, then the holidays. But a lot of stuff to me is in jeopardy. And without news, I think you're close to this washout phase that has eluded us. So I think really this would be a good time for bulls to get their washout behind them, have maybe the next week and a half, 2 weeks get ugly, get that over with. And then from there, you maybe have better Fed commentary. Maybe the US companies are weathering the storm better and the earnings start to be supportive of a little bit of a run, that kind of a thing. But as of now, there's just no sectors for us to say, yeah, let's go into those on the long side, unless you want to trade energy, which made a dramatic move in a short period of time, right? So we went up from when we started talking about the little turn it was having to here. It's only about 2 weeks. Let's just wrap it up on that, as a matter of fact, because it really is the only bullish sector. Everything else looks essentially vulnerable. But this may be too, depending on where it is in terms of RSI. No, it's not really overdone. Just kind of it's one of those things where it hasn't had a break. And this is a great example of what I have that I call my bull bear counter. And this counter is up to 9. And that means that the bulls have essentially had control for 9 sessions in a row, the way that this one counter I have works. And you can see that you don't really get control for much longer than 9 periods, even when the bulls are in control for a while. So again, news over the weekend that maybe I'm unaware of, or maybe tomorrow morning could change everything and make it even more bullish. But I'm just saying, I like to play the probabilities, and 9 days of bull control suggests to me that you are really closer to at least a little bit of a pause or a pullback of some kind than you are a fresh new turning point to be a bull. But again, you have to always take the news into account. So on that, I would say, look, be ready. This is the time to be ready. Analogs from other years suggest that this is potentially approaching the washout phase as well. I'm not big on banking on those. I'm just noting that. I mean, they do work at times, just like seasonality. I think it's good to know. But again, I would really just bet on the here and now with what I see in the charts. And I think without positive news, I think you're approaching a capitulatory phase at the very least. With news, you're oversold enough and stretched enough, as we saw with this view right here, that you could definitely see remember that you could see some good bounces because you don't really get that much worse than this too often. As I said, you're maybe at the 3rd worst reading on a weekly basis, maybe the 2nd to 3rd worst reading in the last 10 years. So just, keep that stuff in mind. That's knowing where you are, right? Knowing where you are. And if I can get my druthers, we have 10% more to the downside in the next couple of weeks, and it gets really ugly. That's the chance to, I think, do very well with short-term trading. And then hopefully at that point, the clouds part to reveal a little bit of sun, and maybe we get a tradable bounce at the very least, if not something that sustains a little bit longer for a while, just given how severe this phase might be. And again, I'm not looking for something this rough, but I do think something that like we've seen before, where you get quick, maybe the last few weeks of just a quick relentless selling, get that over with, get down to 320-ish in the SPY. And that would of course translate to the others as well, because the correlations are so high. cues, et cetera. And then again, that's where your pattern plays out, where some fibs play out, where flat lines play out, where a washout, I think, would be legit, where you'd say, yeah, that's one heck of a fall, right? From week one to maybe like through the end of week 4, that you go from 380 down to 320. I mean, that is a 20% drop in about, 2 to 3 weeks. That's pretty darn serious. So, right. No, I'm sorry. It's not. It's 15. I'm sorry. Yeah, 15%. Still though, 15% is a rough couple of weeks, rough 3 weeks there. So everyone take care, stay nimble out there. We'll see you in the forums, see you in the webinar, see you in Market Outlook, see you on Cocktail Hour. And I hope anything or something that I've shared can help you out this week and beyond. Thanks for tuning in.